Good morning, everybody. Pinterest is a new CEO. Actually, let me do this disclosure before I start talking about any stocks. I am an associated member of T3 Trading Group, which is an SEC registered broker dealer and member of Pacific. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Here is the position disclosure. There's no changes to it. And let's look at charts. First, is Pinterest moving on that? Pinterest is moving on that. Nice. Very nice for the Pins Bulls on the team here. I unfortunately don't have a position in that one. Did for a while. Daily chart looks pretty decent too. Thanks, Dan. I will fix that. All right. So let's hop into it. Wow. So it's still a bear market, eh? S&P here is down 2%, Qs are down 3%, and IWM is down 1.8%. So certainly not a good day. So I guess let me start by saying I got totally faked out today. So if you got faked out by today's price action, you are not alone. Today was really rough. We had a nice little bullish consolidation day yesterday, which led to the thought process that the higher probability move would be up. If I had to put probability in order of up, sideways, down today, I probably would have said by a small margin the highest probability is up. That by a slightly lesser margin, your second highest probability situation is going to be sideways, and your lowest probability situation for today is what happened. After yesterday, after the price action 2 days ago on Friday, plus the rest day yesterday, it really looked like they were setting us up for some sort of continuation into the end of the month here with the rebalance close and everything else that we've discussed. And I really thought that, even if we had, a choppier day where the market closes, red, I did not see in my mind's eye a situation where the market fully negates Friday's positive Maribozu, which is exactly what happened. So this is certainly not a good trading session. It's certainly a big win for the Bears. There are a couple pieces of silver lining out there. One is that the SPY is still technically above previous resistance, which is SPY 380. If you guys remember, Tuesday, Wednesday, Thursday last week, we kept talking about the importance of getting SPY above SPY 380, that we could get that continuation. So we didn't actually break below 380 yet. So that's one little silver lining. And the other silver lining is that the IWM has not negated Friday's breakout candle. 170 was the breakout for the IWM. The low of Friday's candle is 170.90. We closed at lows 172.55. But we've retraced, now maybe 50% of Friday's candle. And that was after we had some relative strength in the IWM yesterday. So there's a couple pieces of silver lining that's out there, but let's make no mistake about it. Today was not a good trading session for the Bulls. It was a W for the Bears, and specifically when you look at tech, the Qs here were a disaster. They led the market down. I remember, very early on into today's trading session, I'm constantly watching the SPYs, Qs, and IWM for signals here on the market. And I remember at one point, this IWM on several occasions today, and I know that the Russell still closed down 2%, but the IWM on several occasions was really showing relative strength to the market. This entire consolidation still being green for the IWM. I mean, we didn't even really get negative to like 11.15 in the Russell, and then obviously we played catch up pretty quick. But I thought that this entire consolidation was decent. This move higher in the first half hour was pretty good. Even like, where was it? Like in this price action in the afternoon here, the IWM is able to give a low, a high, a higher low, and a higher high. The other indices were not able to do that. Um, it kind of closed at lows, but wasn't, smashing new lows into the market close. So you had some relative strength in the IWM, and I remember right here in like these three candles here, watching the Qs and commenting to you guys about, wow, the Nasdaq really looks bad to me, and bank stocks really look bad to me. But this IWM is trying to create this pivot. Didn't even fully fill its gap. It's trying to create this pivot here at 10:05. It's trying to snap back. And then we had this lower high, and then I was like, ugh, we're just not going to be able to get any sort of upside continuation here. So I'm looking at the IWM, getting a little bit hopeful at a certain point. And at the same time, I'm looking at the NASDAQ, and I'm just like, ooh, the Qs here do not look good. I remember at the same time as I was studying that IWM for relative strength, I was looking at this inside 5 here for the Qs. Remember, and I commented that, things certainly don't look good. We certainly look really bearish. We never should have broken the opening low. But if in some world this IWM can take some leadership and the Qs can get back above the 10 a.m. high, that this market will start looking a lot better, and then maybe we can actually get some upside continuation. But things are looking bearish, and still there at like that 10 a.m. to 10:15 time. This IWM was kind of our only beacon of hope, and then this ended up being a failure, and it was really led down by the Qs. And I remember looking at this inside 5 and the Qs, little 5-minute rest period after this 10 minutes of breaking down. And then when this broke down here too, and I'm looking at this chart of Amazon just trading so bad. Low inside 5 and down here on Amazon. Amazon closed down 5.25% today. Absolute bloodbath. We're looking at Apple. Apple was actually trying to act as the relatively strong thing stock, and this, same thing. It tries to give this a little bit of a hammer type doji here. It just takes 5 minutes of rest, and then immediately, new lows are coming in. And just the price action on these FANG name, Microsoft looked so bad. Amazon was the worst. Google looked awful. Facebook a little bit better, but not great. And that was it. And I remember just looking at the market, looking at the SPYs. They were kind of more neutral here around 10 a.m. They had lost the opening low, which isn't great, but you always have that possibility of kind of just a opening low shakeout, snapback type situation. I'm looking at the IWM, like, all right, maybe this can lead us up. And the Qs here were just were just trash. And when you look at the daily chart here, I can point to the SPYs still being above 380 support. I can point to this IWM, and this IWM is really important to me. I can point to this, only retracing 50% or so of the up move from Friday, still being well above 170. But then when I look at the Qs here are not good. So I think as of today's close, bears certainly took back a degree of control, but they don't have full control yet. I guess depending a little bit on which index you look at. So we don't have confirmation across the board is what I'm trying to get across. Because if you look at the Qs, it just looks like complete and utter bear control. You look at the IWM and you say, yeah, this is not a great candle, but we just pulled back to the 80 MA. We retraced the percentage of, Friday's up move, and, this could, give us a higher low and a snapback. And if you go back to the SPY daily chart one more time here, you got to be asking yourself right now, is this the next lower high of the bear market? We got this nice little, rally here off lows. We were super extended to the downside on June 17th. Last week's price action, Tuesday, Wednesday, Thursday, was decent. I remember, I think it was Wednesday of last week, thinking, wow, we gapped down over a percentage point, but closed kind of flat to green on the day. That's a good sign. We had the breakaway gap on Friday. So we had some really good looking price action here. But we know that big picture we're in a bear market. This high from today really kind of just tests this like downtrend line. If anyone's into the connect the dot game, which tends to not really be my thing, but it's clear as day here, this downtrend line. And you got to be asking yourself, is this the next lower high of the bear market? If you are a bull, you're saying to yourself, well, markets don't just de-bottom typically. We actually want to see some sort of higher low come into the market. So if we can get this as our next potential big picture lower low, but it doesn't break to new lows. It leads to some sort of higher low, maybe even a deeper pullback to 376, but we tail back up, and within a day or two we're back above 380. Then maybe you've got a wedge building out that could be a higher low that can actually be part of a reversal process. But this price action is certainly bad. The thought process that we may have had about end of month rebalances or things like that, well, the price action just told us that that's kind of out the window, and um, things are not looking good. Things are not looking good. And I guess that's pretty much all I got to say about that. I got picked out today. I guess we got some inflation data or numbers that came out that was fairly foreboding at 10 a.m. that helped make this market fail a little bit and trigger this downtrend. This opening price action was interesting because I remember like not believing in it. And I was looking for the long today, right? I thought that the highest probability move by a small amount after yesterday's consolidation actually was higher. I remember looking at this opening price action this first 15 minutes and not fully believing it. Didn't really have the volume that I want, and the big thing was this IWM. The IWM was a relatively strong pre-market. I didn't like this first tail that came in on the IWM. So I'm looking at the SPYs, and I'm like, all right, it's a pretty good looking first 5-minute candle here for the SPYs. All right, Q candle here is not bad. SPYs are above yesterday's high. Qs are not. It's a good start. But this IWM candle, which is gapping up the most, is giving me this big tail, and I really don't like that. So I'm going to not believe in this bull market yet. And then we got the inside 5 and up. So I'm like, okay, that's an improvement. We're grinding up here. It was this candle here at 9:45 that was really the candle that faked me out. Because I was initially concerned about the tail here in the IWM, but we're grinding up, and now it's looking like the IWM is regaining relative strength. Because if you look at 9:45, this candle here at 9:45, you get for the NASDAQ, you get your opening movement higher, you get these 2 rest bars, but we're still very extended, and you get this quick kind of breakdown. So for traders who are too aggressive, or maybe trading on like a 2-minute chart for momentum, or they're buying too early thinking that this is a bull flag, this is why we always want to wait for the ADMA to catch up on our flag patterns before we look for continuation, and that's typically what happens. If you don't wait for the ADMA to catch up to a flag pattern, it's very likely, even if the price action is going to continue up, that low breaks. So at 9:45, you get that kind of breakdown here of the bullish consolidation. But it's a quick snap down to our upper band of equilibrium, which is the ADMA on the 5-minute, and we snap right back up above the low of that range. And I'm looking at this and I'm going, all right, not bad here, actually. I'll take this candle. And that's at the same time as the pullback in the IWM, which is now showing relative strength again, doesn't even touch the ADMA. I'm like, okay, I like this. The Qs here are price correcting their upside extension, but immediately showing that strength. And the IWM, which is what I care so much about and what I was worried about off the first 5-minute bar, is now showing me improved relative strength again. And it looks like we're setting up for higher prices. So whereas I was kind of skeptical here these first 15 minutes, this 9:45 candle, I was going to keep it real with you guys. It totally got me. The same thing with the SPYs. Look at the relative strength here. Didn't snap all the way down to the ADMA in the same way that the Qs did, but snap right back up. It's all holding in really well. I'm thinking this ADMA is going to actually catch up to the low. This could be the low of a flag, and we can get upside continuation, and we can go. And I'm like, all right, well, this is perfect now, because now my small time frame price action is starting to confirm what my thesis was in the big picture, which is highest probability is up move after yesterday's rest. And maybe we're not even going to get like another day of rest, like what we got yesterday. And then everything just changed, right? Everything just totally failed. And this is just when I'm thinking about looking to be more aggressive to the long side, just when I think I'm getting that signal from the market. Unfortunately, it just totally failed. We saw some numbers come out. Looks like there was some inflation number that came out at 10 a.m. Not a big CPI or PPI or anything like that, but it wasn't a great number. Maybe that affected this market here a little bit. Maybe it didn't. I don't really see the big increase in volume outside of just, technically there's a little bit of a big increase, but that's what you would expect to see when the market breaks down. I don't really see any trigger here, or a real flipping of a switch based on that causes market to fail. But whether it was that leading to technicals or the technicals just causing a failure here, very quickly things are not looking good. As a general rule, and sometimes maybe you shake it out a little bit, but as a general rule, when you have an opening momentum move like this, and again, for people who have taken the candlestick class, you know what type of candle this is. This is an opening positive Maribozu. It looks really good. Maybe a little bit bigger opening volume would have been better, but this is like a really good start to the day. When this low breaks and they negate this, that's really bad. And as a general rule, when you have an opening momentum move for any stock and the ADMA catches up to the low, it's a big part of it. And then even with that, a new low comes in, your probability of new highs intraday does become very low. So for me, it's like, all right, I'm really excited with how things are going. I added a few new positions. They're paying me. Everything's looking great. The stocks that I bought or that I got into today are acting relatively strong. And all right, 905 here. This is not good. Maybe it's that quick shakeout because the IWM's looking okay. The Qs look terrible. But then it's like I was saying, once we got the inside 5 and down in the SPYs and Qs, that really kind of confirmed this breakdown, along with the IWM then losing its bullishness and making those new lows. I just knew that the long thesis for continuation was shot. Even at that point, I didn't expect us to break down the way that we broke down. It honestly really took me by surprise, and it just kind of is what it is. All I can do is study the market in terms of risk, reward, and probability of success. Try to position myself around that. I might believe certain probabilities of certain moves, and I position myself that way. And if that lower probability situation occurs where it goes the other way, or maybe I misread it, then you manage your risk and you take your loss, and that's it. And you just kind of move on from it. I definitely had some frustrations today, though, because I felt like I had some really, really solid positions on, and those solid positions just they didn't help me out. I was really happy with how Robinhood was trading. Even here at 11:45, I got no new lows coming into the stock. The opening low quickly became. At first, I was giving it more room than this, but when we got the new highs, I raised my stop to the opening low here. I was super pumped when my stop loss held by 1 penny, and then the market started to bounce and the stock started to bounce and was back above $9 again, and I thought it was looking pretty good. I was able to kind of work my position back and forth. And then eventually the market, was just so weak that it caused that opening low to fail and pushed me out of that trade. So that was disappointing. I can't help but wonder if I made a mistake on raising my stop. Originally, my game plan was to kind of give it more room. I discussed that in the morning meeting. I wanted to have a game plan to start small, but be able to build against me versus yesterday's low, or build with me if I see momentum coming in. So it was kind of my original game plan. And then I, adjusted the stop to this low because we had a low, we had a new high. It kind of satisfies my rules, and I don't have it. And now I'm wondering if maybe I, made a mistake by tightening my stop up here, because I still do think that this is one of these buyout candidates that I generally do want to be long, like a pins, which I, don't have a position in pins, and pins is popping here a little bit after hours. So I'm wondering if maybe I made a mistake there, but honestly, the way that I traded it, it's a failed trade that I didn't lose any money on. So you always want to be happy when your failed trades don't cost you any money. The other one that I thought I had a money trade with this Airbnb. I bought like 102 pre-market. I added, I think like 102.60 something after the market opened a little bit. Caught this tail. The ADMA caught up. Getting upside continuation here. I'm getting confirmation on my inside day and up. It's breaking the 105 resistance. The relative strength in this thing in the beginning of the day was just phenomenal. I'm thinking I got the money trade here, and then this one also then just totally fails. I had some that I even gave all the way down to the inside day low. I got stopped out of that. I tried one additional trade even after that, and that one was just a straight failure. So, unfortunately, this one just did not work out for me. And it looked so good here. And it was the market that caused it to fail. And then the one that I also got in, I got in a little bit after 9:45, based on the market conditions that I'm describing, was this Jumai, and this I just took a straight up loss in. The market conditions were improving. We had that little hammer in the marketplace at 9:45. This was in conjunction with the hammer here for Jumai at 9:45. This name got brought up in the morning meeting today. Technically, I cheated. The real trigger here for the momentum should have been $7.20. So I took a straight up loss in this Jumai today. It just totally failed for me because I felt that I had the probability needed to cheat. And that's what happens sometimes when you cheat. Is technically this trade never triggered, so I took a loss in something that I didn't need to because I did get involved in it early. But I just felt like at this time I had just so much on my side. The market was improving. This thing got above $7 on really good volume here. You gotta love how this increase in volume through $7 is waking up. So I didn't even want to wait for the $7.20 entry point above yesterday's high for the actual daily chart continuation. I wanted to get a cheat on it. I wanted to get a jump start on it. So I bought some stock. I gave some, down to the actual last pivot low that came in. And this one was the one here that was just a straight up failure for me. I was able to obviously sell some stock in Airbnb. I was able to sell some stock in Robinhood, but this one was a total failure for me. Thought I had the market on my side. Thought the stock was showing relative strength. I was liking how it was putting the opening high. I was liking the volume that came in. Just thought I had a lot of things on the side of my trade, and then it just totally failed. But that's why we have our stop losses in place, right? Because at least I'm not bag holding this thing all the way down to the low of the day here or whatever, $6.49. So net just a super I think disappointing trading session. The opening price action on the day faked me out, and it is what it is. Some of these other ones that I had on my radar just never looked right to me. Like I had SoFi on the radar for clearing above yesterday's high, and I know people were asking me about going long off of like this candle's low, and I don't hate that, but I was asking, I just didn't like this relative weakness, right? Like why is the first bar here having the stock go negative when the SPYs are doing that, when the Qs are doing that, when financials are doing that, when the IWM is at least positive, how come the SoFi is immediately going negative? So I didn't like the relative weakness there, so I didn't get involved in it. The financials were really good early on in the day. This is another one that just caused the market to fail. This XLF was holding up better than the market was. It was creating a nice bull flag here. We discussed these banks in the morning meeting. Bank of America was a great opening drive trade if anybody bought this thing as soon as the market opened. You had Citi breaking resistance on the daily, you had JP Morgan breaking resistance on the daily, and then eventually the market just got to all this stuff and caused it to fail. XLE had some continued relative strength today, but this was very tricky, and the daily chart spot wasn't great. I said in the morning meeting that I didn't love the idea of buying these XLE stocks today with them opening kind of right at the ADMA. I thought you need to already be in them. So I'm still in this Apache from below $36. So, just kind of resting on having a good price on this thing. I have not been trading Apache actively. I tend to trade, my swings, as most of you guys know, very actively, like trading around a core position. I have not been doing that with Apache. I've just been sitting on it and letting it run and seeing what it wants to do, seeing if it wants to reverse, because it is at least a small time frame counter trend trade after we had that breakdown here, kind of more in mid to early June. And that's pretty much it. I think that's a synopsis of the trading session, a synopsis of the thought process from the morning meeting that unfortunately didn't work out. I think that we are right an incredible percentage of the time based on our morning meeting research and thought process and thesis. And I think that even on the days when we're not right, we usually are able to adjust like very, very quickly. And honestly, today, at least for me, was just not one of those days. My thesis from the morning meeting turned out to be not correct for whatever the reason is. And then on top of that, instead of you're noticing right away, okay, that thesis isn't correct and adjusting, Today was just a day where I got totally faked out by that opening price action. So just is what it is. So I got some down P&L today, but it's coming off of I've been trading really well recently overall, and tomorrow's a new day. So we all have our down days. I don't care how long you're in this business, they happen, and I'm always very honest about them when they happen for me because I always hope that everyone can learn from my you know situation, whether it works out well or it doesn't in that day. So with that said, happy to answer any questions that you guys may have. I'm going to start by scrolling up here into the virtual trading floor. I saw that Anthony was sneaking in questions right as the market closed. So I'll scroll up a little bit higher than I usually do, and I'll start with Anthony. Two questions on today's afternoon meeting, just getting it out now. I had a trade in Neo. That was covered and got to my second order at 23.43. At 23.45. That happens to be the high of the day here, and it never filled. That's unfortunate. I noticed large size there and sell off. When you see that size, would you consider lowering your offer? So the short answer to that is yes. So first of all, I try not, and you can't always do this perfectly. I actually try not to bid an offer on numbers divisible by 5, and especially numbers that are divisible by 10, and especially numbers that are divisible by 50. And that's because at those more roundish type numbers, you tend to have more liquidity. Now, 23.45 is not a bad number. It's much better than sitting at 23.50. Sitting at like a half like that, or even worse, a whole number like $23, $24. You usually don't want to join those types of prices because there tends to be a lot more liquidity at those prices, and it's much more difficult to get filled. But 23.45 is kind of not the end of the world. If I do notice that there's a lot of liquidity sitting at a price, even if it's a random price like 23.42, I do try not to join it. I will try to front run it. I just would be cautious here. I know you're still a little bit new, Anthony, so just want to make sure that what you saw actually was real liquidity for this type of stock. Neo traded 76 million shares today. So unless you were looking at an offer that was like, if the amount of liquidity at 23.45 was like less than 150,000 shares, that's not so much liquidity for a stock that traded 76 million that you want to avoid the price. So, and I doubt, honestly, I would need to see it, but just knowing Neo as well as I do, I'd be surprised if there was a really, really big offer sitting there at 23.45 that was so big that it would, stop you from getting your fill. Sometimes you just happen to be offered at the high, and just a couple prints go off or whatever it is, and you don't get the fill, and it's unfortunate, and it just kind of is what it is. It happens to me all the time. So I don't necessarily think you did anything wrong there. So that's your first question. Your second question was on Apple. You shorted through 104.85. 104? You mean 140? I'm assuming you mean 140.85. Probably need you to confirm the price. I don't really see 104.85 as something significant. I looked at 141.06. Okay, yeah, so that is what you shorted. 141.06 is that high. 141.03 is that high. You shouldn't be getting stopped out on this. If you got stopped out on this, your stop was in the wrong spot. So first of all, I don't see why you would short 104.80 or 140.85 personally, unless you're shorting the break of yesterday's low and you got a little bit of 10 cents of slippage, which easily could happen. Fine. But otherwise, I don't see the significance of 140.85. Secondly is, and I talk about this all the time, you can't have these stop losses where the ADMA didn't catch up. You're begging to get shaken out. And I don't know exactly where your stop loss was, but if you got shaken out on this move to 141.06, your stop's in the wrong spot. If you're shorting on this negative Maribozu here, your only possible stops are the high of the negative Maribozu, or honestly, more ideally, the last pivot high that came into the market. So you're taking on, maybe you're taking on, I don't know, 85, 90 cents worth of risk, something like that. But that's the appropriate stop loss for the trade. If your stop's in here, EDMA hasn't even caught up yet, way, 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 way too tight. And then when the new low comes in, you can lower your stop to one of these pivot points here. But otherwise, it's just way, way too tight. Yeah. All right. Scrolling down here through the VTF. We're talking about meta. All right, now I'm just confused. But we covered at least the Neo. So from Gabriel here, what does the DAL news mean? I literally booked a trip yesterday. Delta Air issuing system-wide fare difference travel waiver for July. I have no idea. Oh, they're trying to get people to not travel on those days, probably because they don't have enough. So they already. That sounds like they're already going to be canceling 4th of July weekend flights because of not enough pilots, is what I'm reading through the lines there. And they're trying to get people to voluntarily step out. From Elliot here, when you have a long bias and then the market tells you that your bias is wrong, do you have any tips how to keep an open mind and adjust accordingly? Yeah, the biggest thing is to recognize that the market's telling you something different and to at least get out of the way. I think that one of the most difficult things in trading is to be able to do a full mental flip, meaning that you have the long bias and the market's telling you, what today's a short, and then to be able to do a full mental flip and actually be looking for and executing short trades. I've always found that to be difficult. It's certainly not impossible. Felipe, who unfortunately hasn't been able to spend as much time with us recently, that's actually something that Felipe is very, very good at, is flipping like that. I've always struggled with it a little bit. For me, it's a win if I'm able to, I'm coming in with the long thought process. I think the market's confirming it. I'm going for it. I'm putting my risk on. I'm getting stopped out of my trades because I'm managing my risk. That's all the right stuff to do. For me, it's a win to just go, you know what, my thesis was wrong. I got to get out of the way. And now what I'm not doing is I'm not, fighting longs at every possible pivot on the way down. Now, there were a couple of, like a very select few strategic points that I did call out on longs on the way down here. But they were very few and far between, and it was only when I really felt like I had an advantage. Like I know I called out the low here at noon, and that low at noon turned out to be the biggest bounce probably of the entire day outside of the opening move. But what I saw there was the time of day, the extension. The big thing I was looking at that point, and eventually the idea failed, was I was looking at the Q gap fill here at about this 385 area as potential support that I called out. So the low here is this 385.55. I think I said you could try to buy 285.55. I think I said you could try to buy 286 on the way up versus that low because of the daily support in combination with the small time frame extension plus how big the downside move was into that level. That was confirmed by like an inside 5 and up here. Not a tremendous amount of extension where we're getting a huge move on the 5-minute chart, but still enough to be able to get at least your risk covered on this move up to the ADMA. And if we can get a 15-minute correction, which I thought was likely given the time of the day and the degree of the down move, you'll get an even bigger move. And that's exactly what happened, is we had a 15-minute price correction. So, very strategically, a spot here or there, I still called out like a long, and that was this is about as good of a counter trade as you could possibly get on a day like today. But, still recognizing now, and I called it out, guys, it's a counter trend trade. Get your risk covered, sell more at the 80 EMA, sell more at the 21 EMA. For people who were able to take my candlestick class last Wednesday, when I was talking about, counter trend trade game planning, this is exactly what I'm talking about. get the risk covered, sell more at the 80 EMA, sell more at the 21 EMA or the 80 EMA for the 15. Got that risk more than covered. Put yourself in a win-win situation. And then if you want to hold 10 to 25% of your original position after this happens, just in case this retracement higher becomes a reversal, I really like that because at that point you're in a win-win. And when you do get stopped out, which is the most likely thing that's going to happen, you're still made money in the trade. But you got to be very, very selective. So again, to directly answer your question, Elliot, for me, I personally, because I'm not a perfect trader, I find it to be a victory if I've got a thesis on the market or whatever, and the market tells me it's wrong. Just to be able to step back and not do anything is a win. And then if you're really, really good, you might be able to say to yourself, well, you had this thesis for all these reasons that we could go higher. The market's telling me that that's a failure. Now it looks like it's turning into a downtrend day. Maybe I can start finding some, actual short execution setups to be able to come in and trade here on the small time frame. I didn't do that today personally. I just, did a decent enough job, following my game plan for Robinhood, for Airbnb, for Jumai, manage my risk for them, losing my risk in some cases there, and kind of moving on with my day, and keeping any downside damage to my P&L fairly limited, outside of giving back profit on swing positions that I'm already in the money on. So I hope that helps, Elliot. Tommy here. What would you think of Neo on the monthly chart? I know it's a long way out with that pivot though. So I actually don't have a monthly on this chart. Best I got a weekly, which you can take a look at. I'm very biased towards this company. I assume that you're looking at something down here, but the monthly is probably even more dramatic. Yeah, I mean, look, I'm biased towards this thing. You can tell here, especially based on the weekly, that this big move had it very extended. I like the stock. On this weekly chart here, we do have a confirmed reversal on the weekly of lower highs and lower lows to, at least initially here, higher highs and higher lows. We'll see if that's able to provide us some continuation. You go to the daily chart, obviously a weak day today, but did not lose the key support that we kind of discussed in the morning meeting today. We talked about the idea of maybe looking to build into Neo versus like 2150. So that's still intact for now. Obviously, if the market continues to deteriorate, this will eventually fail as well. But so far so good. From Jackson, how would you describe how AMD trades? I'm trying to understand why this is my best name, so I can maybe focus more on similar things. Yeah, so I mean, AMD I think it's a good trading vehicle. It's a good stock to trade. It's a good stock to trade regularly and actively. This, by the way, and thank you for reminding me, this was one of the keys very early on that the market was going to fail. We've seen it pretty consistently. The difference today was that there was no signal from the IWM. We've seen pretty consistently this year that when the IWM fails, the entire market fails. We've also seen when these semis can't go, when they're acting very weak, a lot of times the market fails also. So, and I remember looking at this AMD and being like, after the second candle, I'm like, wow, I really don't like how this thing looks. But then I typed up NVIDIA, and I'm like, oh, well, NVIDIA is fine. So maybe AMD is just providing some relative weakness for whatever reason. But AMD showed you relative weakness early on. So if you were, mentally flexible enough to go to the short side of this market, this is a great one to have gone to just based off of the, concept of relative strength and relative weakness, which is one of our really important layers of probability. So I hope that helps, Jackson. I knew your question here was kind of broad. And now look at this, AMD back down to this $80 support. Oof, not looking good. Not looking good. Again, after listening to you for the past couple of weeks, I'm really focusing on the Maribozu more closely, and it's a great help in determining market conviction. Yeah, for sure, Bandit. I'm glad that's helping, and that was just even a big signal, like I was saying off the open today. The fact that we lost, like I talk about, the opposite side of a Maribozu is really important. So while we're above it, that the bulls are in control. But if for any reason you start to really lose it, especially on a closing basis, that's a big signal also. that why like this the low of this candle never should have been lost, and once it was lost, that was really the signal today that the longs just were not the move. So good stuff, good stuff. Tesla lays off hundreds of autopilot employees in California. Oof, what's Tesla doing on that? Trading down after hours, not massively down after hours, but yeah, it's not good, not good, not good. Big market cap. Big market cap on this Tesla. Love for Tesla just to go lower in a vacuum. Does Maribozu have more meaning in the middle of the day versus 9:30? Not necessarily. A Maribozu has more meaning based on the volume that's prescribed towards it. So if it's got higher relative volume versus lower relative volume, that's what is going to tend to matter the most. Otherwise, that opening price action just in general has more meaning to me than midday price action. It's a very general statement, but a lot of times your midday price action is sleepy. Cool. Anybody else have anything for today? How would you have played QCOM on the news? Sure. So the way that I like to trade news, and so first of all, Pat, shout out to Pat. He got this Qualcomm news in like stupid early. I think before the stock even like initiated this first green Maribozu. But usually what I do is I will, if I think it's significant news, I play it versus the opening of the news bar, right? So if the news came out in the 12:10 bar, if the news is significant, this low should never be able to break. So I want that to be my stop loss. And then the question is based on how fast I'm able to read the news and how important I think it is what my pricing is. Because maybe if my stop loss is 127, maybe for a name like Qualcomm, I'm willing to pay up to 129, but I'm not willing to pay up to 132.50 or 132.75. Yeah, at that point my risk reward is just no good. So basically when I trade news, I try to be long versus like the news low or short versus the news high. And it's a combination of reacting to how important I think the news is versus what price I think I can get, and if the risk reward therefore still makes sense. So that's it. And then if you're super late, then you can sort of look at your chart patterns or whatever. But that's going to be the best trade. All right, team. Well, almost 5 o'clock here. Looks like I got through the questions, so I'll call it. I hope that everyone managed their risk. There is a well, so Ramon's saying sometimes the stock moves initially in one direction and then reverses. It's not going to happen if the news is significant. If the news is significant, it'll never break the low of the opening news bar. If the news is not significant, the market views it as not significant, then absolutely it will. That's a failed trade, and then you got to get out of the way. Because if same thing with like any high volume candle. If a lot of people just came in and bought on this bar, and then that low's breaking, all those people are out of the money. You might get a reaction to the downside. You got to make sure that you're out of the way on that. So, anyway, that's news. So yeah, I guess just what I was about to say. Today is a reminder for me because I am not a perfect trader and I am wrong on certain days. That risk management and money management is always going to be the key to the business. Because I don't care how long you've been trading, how skilled you are, how good you are reading charts, how experienced you are. You're going to have down days. You're going to have failed trades. You're going to have days where you were just off. You're going to have days where sometimes even maybe you are air quotes right, but the lower probability move is what actually occurred, and your trade failed. And risk management and money management are always going to be the key. So if you're anything like me today and you didn't have a great day, don't beat yourself up on it, provided that you did the right things. Were you following your game plan? Did you manage your risk properly? Did you put yourself in the win-win situation? Did you get your risk covered as much as you possibly could? And if the answer to all those questions is yes, then you did a good job regardless of what one specific day or one specific trade's P&L is. So on that note, I will leave you guys. Have a great night, and I will see everybody tomorrow morning where we will, thanks Tommy, where we will assess all of the price action and take it from there.